All right, guys, I am back again with another video. And in this video, we want to look at the Atom Cosmos cryptocurrency trade we talked about using Ichimoku. So we want to update that trade because we had some levels where we were looking at the market where we could possibly get into trading this market and looking for it to move to certain levels. So the market has honored some of the levels that we were talking about, and now it appears to be making a move. And we talked about it making a pretty good move, but right now it made a nice move off of that level. So we want to see where price could go to and what the future holds for this cryptocurrency. So I'm about to give you some of that knowledge and let you know based off of Ichimoku levels and so forth. But also, guys, if you missed the first video, then you might want to go back and check it out so you can understand a little bit more what we were talking about and what we meant about where the market was going to make a move from and where it could go to. And I'm going to explain that in this video also, but you might want to go back and look at the previous video, and there's going to be a link down in the description below and at the end of the video here. So you'll be able to see that and understand where we got the thought process that we came up with. And now I'm going to update you on where we think the market may go. So we made a nice move off of our levels, and that was what we were looking for. So hopefully you guys, you were listening to what we were talking about, and hopefully some of you guys took an opportunity to take a trade at the levels we talked about. So if you did, let's update that and let you know what to do and where you could see this market going to. So let's get to that right now. All right, guys, so here we are basically looking at this atom bomb that's been ignited and looks like it has a possibility to explode. So we want to see what that can do to this market. All right, so where we are was basically we started this video. We had our previous video. We were talking about the market and it was right here. So we based our levels off of where this level was because I told you guys the market trades in N wave. So we had our wave like this. This was one wave. OK, so that was one full N wave. And then the next wave was where we are now. So the next wave wasn't complete the day we talked about the video because I didn't know if it was going to end here. But we expected the market to come down to this zone right here where we have this marked. So we already had that marked and the market came down to this level. So now we have this. This is the second leg of the wave. And now we are in the third leg, which is the N wave. So the market continually makes N waves. That's the natural progression of the market. And this is all Ichimoku stuff, but this isn't all Ichimoku stuff. All right, because really the market, if I take Ichimoku off the chart, the market still moves in this structural pattern on all time frames because it's fractal by nature. So we're expecting the market to reach targets. All right. So the first target is this level here at 44.8. All right. And then we're looking for the market to go to the next level at this N value at 57.595. And then the last would be this 72.712. But this would be the more likely level. All right. But this level here at 44.8 is a major level. I think it's the all-time high, first of all. And the second thing is it would be a double top. And then also, so yeah, this is the all-time high on this. And then the major thing with this is that it's going to be a level that's going to be hard to get through. So if the market can't get through this level, what it's going to do is possibly develop a P wave. I am looking for it to get through there because we've came off of this level with some strength. So if it doesn't go through this level, it tends to do this, which then forms this P wave structure. All right, and then it could break to the upside or downside. Usually the side that it came from is the side that it goes, but it could also do, and a lot of times you'll see this happen. And this will be a nice ascending triangle pattern. All right, and then the market could break out of there to the upside. But the way we've come off with some strength, it looks like we're just attacking this level right off the bat. I'm not sure what's going to happen there though, but that's what I would look for. So you should have actually been into the trade already. I think it's like late to get into the trade, but if you're investing, then it may not be. If you're trading, it's a little different. You trade, you're going to take profit, you're going to get out, you're going to get back in. You're not going to sit through the drawdowns and so forth. So we suspect, like, the market was here when we made the video. I figured you guys would get into the trade between this level. All right, so it came all the way down to the level we thought that it would. And in this area, you should have been looking to get into the trade. All right, because then you could have used this area for your stop loss. Now, if you're up here getting into the trade, you still have to have this level down here because you got to be technical, because the market could easily come back to this point. This may be a level that holds it, but it could also still come back down to here. This would be the real level that would hold it. All right, so if it was going to hold it, and it could still even break through there and then stop you out. So period, it doesn't really, I mean, like, I like to have tight stop losses, but I want to get into the move early to have a tight stop loss. A tight stop loss in an extended market makes no sense. I mean, because if I was tight here and I got in here, okay, I can manage that risk, right? But now if I have to be at that level, why would I put a stop loss here and I'm getting into the market up here? The market can easily pull back one candle, all right? And there's nothing really to stop it. There's no support really to stop it. So you want to be at a level where there's support, close to support, to get into your trade. So the way we found our targets, I talked about that. And we always like to look at the market pulling back to structure. Now, if you talk about Ichimoku and looking at that, when we talked about this moving higher, we had blue skies. So that's blue skies mean that the market is bullish. We had a TK crossover that was bullish. And we had Chiku span above price, above Kijinsen, above the cloud. All right, so there was nothing to hinder us. And the market was in a correction phase, and then it moved back to the upside now. So here you could see the market moving higher and then correct. And now we're starting to move out of that level. All right, so I'm using cumulative volume down here. This uses Heikin-Ashi candles, so it pretty much is going to follow the strength of the market, and you could see the strength right now. Now, just because we have a good move here doesn't mean the market's going to go. It could do anything at this point. We never know what the market's going to do. But pretty much if you follow structure, if you follow support and resistance, and those things will keep you tight. Because I just look for structure in the market, and then I look for structure levels, and then those are the levels where I'm going to trade at. All right, so this trade was a classic Ichimoku S-wave trade, and I can't put it any better than that. This is the wave pattern that it went down, came up, came back down. This is as S-wave right here, but it looks like to me a Z, but it's a S-wave. This trade really comes back to structure right here, and it bounces off of that level. All right, and that's why we talked about taking the trade at this level. Now, we made a zone because we had structure over here, so we had lower structure. So we put these together to make this zone. Then we just extended it, and then we look for that S-wave trade at the structure level, the zone, because we didn't know if it would be this level or this level. And then it could not have been either of them. It could have been the Kijinsen, because the market likes to come back to Kijinsen. So, and another reason that, like, when we look at this, we drop down to Kijinsen. Kijinsen, when you get far away from Kijinsen and you get a gap with Tenkan-sen and Kijinsen, you get this gap like this. Normally they're going to be together like this, but see, when they gap like this, then the market starts to pull back. So they gap like this. When they were here, the market was down here, and then the market pulled back, and then that started the new move to the upside. So we gapped here, the market was a little higher, and then it pulled back. So we saw it pull back to structure. We figured the directional bias would continue because we were above the cloud. We had an N wave that was bullish to the upside. So we figured that the market would continue, and then it painted this this V wave. And then now the third leg is now another N wave. So you had the one N here, and then now you're getting another N wave here that could take us to this level or this level. All right. Something I wanted to say, I forgot. Okay, yeah. So also with Ichimoku, so when you're looking at Ichimoku, this is your TK zone between Tenkan-sen and Kijun-sen. You want to see the market break above that level and close above that level, and that's what's happened. That shows strength, okay? But the only thing that I'm worried about, one thing, even with this move right yet, Tenkan-sen's not angling to the upside, and Kijun-sen barely moving to the upside. We need to see some angulation. The clouds are still flat too. That's my issue. So maybe once we get a little bit of distance, we'll start to see that angulation. But that shows me that there's not a lot of momentum at this point. All right. But I do like this setup. It's kind of late now if you didn't catch it from the previous video. But this is basically for you if you did catch it, showing you where your possibilities of profit are. So those are going to be 44.8, 57.595. And then finally, your last level would be your E value, which is up here at 72.712. So this is kind of like Ichimoku concepts, but to me, it's really market structure. That's what all Ichimoku concepts fall off of, the market structure. You can take Ichimoku off the chart and still do the exact same things that I'm telling you. You'll still have a S wave. You'll still see the N waves. The market still moves in that pattern. Okay. So for me, like when we're trading, we're using a momentum oscillator that we created, that the candles turn green when we have the momentum to the upside, and they turn red when we have momentum to the downside. Okay. So like this move coming up here, we had this green candle. We saw momentum to the upside. Then it turned gray because we lost momentum. We were between upper momentum and lower momentum. Then the market dropped here. We had more momentum, but then we lost that momentum. We didn't have either momentum to the upside or downside until this point. Then we had more momentum to the downside, but then we lost that downside momentum. This is a good sign right here. And then we started to turn green because we had upside momentum. All right. So guys, basically you should already be in the trade and you're looking for the market to complete an N wave. That N wave is right here. 1, 2, 3. And we're looking to complete that leg maybe here. That's not a full N wave. This is fluctuation level. We're looking for this level. All right. And this is 1, 2, 3, and we're shooting for 4. So most traders know what a 1, 2, 3 is. All right, it's basically a V wave in Ichimoku. 1, 2, 3, 4 is your full N wave, and that's your target level. And the way I find those targets, I use my fib extension tool, and I just mark like this. I'll mark this high, and then come to 3, and then the 1 to 1. So where our targets are now. So actually I'm wrong with the target. We need to move this. The target's that's the old target. This is the new target because we dropped lower. So this is going to be the values we shoot for. So let's make sure we got this right for you guys. These are our values now. All right. We're looking for that 1-to-1 measured move. And that's what an N wave is, a 1-to-1 measured move. And I talked about it in the previous video, so I don't need to really go over it right now. You guys, if you look at that previous video, you'll understand what I'm talking about with all the concepts I talked about. So I'm going to take this off the chart, and then we're going to talk about that level again. So again, I'm sorry that I gave you the wrong level just earlier. The top level here, 44.8, is the first level, but then our N value is at 52.759, and our E value is at 64.708. Those are the targets you're going to shoot for. I previously kept it marked from I believe I took those legs, first of all, from the full bigger N wave, but I broke it down to the smaller wave, and I also moved it down because the market moved down a little bit. All right. So we're using this wave right here. and that's going to be your target. And I do think this thing, if we could get past 2, which is your 2 value, because you, again, talking about 2, you're talking about 1, 2, 3, and then you're shooting for 4. This is where I think we end up if we could get past this level. This is the fluctuation level, so we need to get through that level. We get through there, then we can say the atom bomb has exploded. All right. So hopefully this stuff helps you guys out. Just wanted to get a quick video to update where we are going to or could be going to, and hoping that you guys did take the opportunity to get into a trade based off of the last video that I talked about. But again, I want you guys to know I am not an investment advisor. Everything that I talk about and say and do is for educational purposes. So I am trying to show you and teach you some concepts based off of Ichimoku and based off of market structure and so forth. But if you decide to do any of these things that I'm talking about as far as taking a trade or so forth, please do consult with your own financial advisor so they can tell you the relevant risk that you may face when you are trading cryptos. All right, my friends, hopefully y'all enjoyed this. And until next time, God bless. So long.